Welcome to Friday Takeaway. This week we are doing REITs, and in particular Axis REIT and MQ REIT. But before we get into that, China and the US continue to trade tariff blows, and the situation has just gotten more tense, with China's state media saying that it could escalate to more than a scuffle if the US administration is unable to marshal its mobster mentality. Beijing said it would also impose 25% on $16 billion worth of US imports, matching what the US is planning to do on Chinese goods starting from August 23rd. It is uncertain what this kind of retaliatory policy will do for sentiment, but at this moment, in general, it just makes investors antsy. Trump doesn't seem concerned though. He just announced that he is launching Space Force to police space. Really? Speaking of conflict, Canadian President Justin Trudeau is also holding firm on his criticism of Saudi Arabia's human rights after it jailed two prominent women's rights activists. And the kingdom likewise is demanding an apology, saying that it will never at any point criticize Canada's policies and is threatening to suspend all ties with the country. Back at home, the limelight was firmly on super yacht the Equanimity, which arrived 3 days ago at Port Klang. This $250 million yacht is said to be owned by fugitive Lau Teck Joe, or Joe Low, due to allegations that it was bought with stolen funds from 1MDB. It will remain in Port Klang as authorities continue their investigation. Speaking of 1MDB, ex-PM Dato Sri Najib Razak ended up back in court again on fresh charges of money laundering under MLA, amounting to 42 million ringgit from SRC International, a former subsidiary of 1MDB. He has pleaded not guilty to all charges. In this week's This or That, we take a look at REITs, specifically Axis REIT and MRCB-Quill REIT. Both announced their results this week, which were overall okay, but it does come with some caveats. Both also gave clearer indications of their future strategy, but not all seem to think it will pan out. So now let's take a closer look. Axis REIT holds the distinction of being the first REIT in the country. Their portfolio includes 42 properties with a focus on office and industrial real estate. It includes Axis Business Park, Crystal Plaza, Menara Axis, Quattro West, and Axis Technology Centre. Total assets under management stands at just over 2.5 billion ringgit. So Axis REIT says it is looking to add 2 more assets to its portfolio during the second half of the year, with a preference towards industrial properties. Why is this bad, you ask? Because analysts say that Axis would mostly likely ended up incurring higher costs due to higher property expenses and higher financing costs. Plus, it could prove a challenge to fill up its current assets, given the current weaker market conditions. Another thing to note, its gross yield of 5.4% is below the industry average of 5.9%. But its second quarter numbers were good, with NPI or net property income up 15% to 26.83 million ringgit due to a bigger portfolio. For the first half of the year, its occupancy rate also improved to 94% from 91% in 2017. It is also hoping for 11% growth of its portfolio value to 3 billion ringgit. Also, 2 days ago, it bought an industrial facility in Negeri Sembilan for 18.5 million ringgit cash, with a starting net yield of 7.7% before financing costs. At last look, its share price was up about 2.65% to 1 ringgit 55 cent this morning. MIDF Research is keeping its whole call with a target price of 1 ringgit 55 cent. It expects higher borrowing costs and expenses to offset the higher income from new assets. Kenanga Research is less positive on the stock and has an underperform with a target price of 1 ringgit 25 cent. Kenanga says outlook is lackluster and most positives have already been priced in. Overall, consensus is firmly in the whole camp, while target prices range from 1 ringgit 25 to 1 ringgit 76. MRCB-Quill REIT or MQ REIT main focus is commercial properties, mainly office buildings, retail assets and car park. Its portfolio includes Platinum Central, Quill Building, Plaza Mont Kiara and Menara Shell. Although MQ REIT's second quarter net profit was up 6.5% to 23.49 million ringgit due to lower property expenses, but revenue was pretty much flat at 43.7 million ringgit. The culprit for this mismatch was lower revenue from Platinum Central, and there was also a disposal, which meant a loss in revenue. Its NPI year-to-date was 4.8% lower at 67.7 million ringgit because of higher OPEX, and going forward, it faces tenancy renewal risks. There is also a possibility that it might have to sacrifice reversionary rates or offer incentives such as rent-free periods. The good news is that about 70% of its leases that were due during the first half of 2018 have been renewed and is now in advanced talks with its remaining tenants. As at June 30th this year, its average occupancy rate stood at 96%. It also had secured new leases for a few of its properties with demand coming from companies in IT and retail among others. Also earlier this year, it said that improving oil prices could eventually translate into more oil and gas firms wanting office space. Its shares went up 6.3% to RM1.18 this morning from RM1.11 a month ago. CIMB has a hold call on the stock with a target price of RM1.14. It says the upside of the REIT is on better rental reversion rates, especially its KL assets, but it is still worried about those remaining leases that have not been renewed. Overall, analysts are split pretty down the middle with 4 buys and 4 holds, with target prices ranging from RM1.10 to RM1.50.